Good morning and welcome to another acysecurities market review. Today I'm going to be covering a couple of pairs and some of the movement around last week, and then we're going to have a look at the news ahead of the week that's coming up. My name is Alistair Schultz and I'll be your host through today's trading journey. The first thing I want to go through today is the Australian dollar. Now, it has been in an overall downtrend for a couple of weeks now, but you can see there's been a little bit erratic. We get a period of consolidation, then we get another move down, period of consolidation, another move down. It repeats quite regularly at the moment. However, the red line that I've got on the chart here at the moment indicates the beginning of last week. Now, what we can see is that I've marked up some news, the federal FOMC minutes, the coronavirus updates that we've been getting along the way, and US CPI. The Aussie was rather quiet last week, but we still saw a minor movement on this. Now, whilst this is a 4-hour chart and the candles do look small, they have impacted price. Now, you can see that by the FOMC minutes that we've got here. The candle immediately after has had a very big wick and has been moving very fast from a technical sort of perspective, but it hasn't really evaluated or made price move anything significantly. We're seeing the same prices at the beginning of this week that we were last week. The next chart for us to cover is on gold. Now, gold last week, I put up some trend lines for us to have a look at and get an idea of where we might see some resistance and support occurring. Those lines are still active at this point in time, and we can see that it has occurred with a bounce off price here. Now, interestingly enough, the news around the week before last around the US-China trade and China asking for some trade flexibility has impacted price on the whole, and we've seen an immediate move down shortly over the next couple of hours. From there, coronavirus impacts here, and we've also had US non-farm payroll events, IMF and the Swiss National Bank and data being released has impacted price, and of course more coronavirus later on in this week, and of course retail sales has been the bigger one for the US. Now that has impacted the gold a little bit, obviously because we've got a little bit of movement between safe haven currencies moving into the other currencies that you wouldn't usually expect, and people going in and out of gold. Now, next one to look at is the pound. And I'm not sure if you can see the line just on the top here, but we have what we would call a contracting wedge occurring. So we've got a longer trend line on the bottom that's been fairly stable with a downtrend line occurring on the top. And prices continue to respect that. You can see the respection here and in the weeks before up at the top side. Now, the most interesting piece of news other than the FOMC minutes, which really didn't affect price all that much, it just gave us a really spiky looking candle without much change in movement, was the resignation of the finance minister in UK. Now that has actually impacted price a bit. We've seen it move up, we've seen it then go for a period of consolidation towards the end of the week. Now, the next chart I want to look at is actually the euro. I don't have much news to talk about it on that sort of factor, but I just want to highlight how it has impacted and where it is going at the moment. For the last number of weeks, more than 10 weeks, it has been trading in a down-going trend channel. And at the very beginning of that trend channel, we saw a head and shoulders pattern up on the top left. Now, funny enough, I've opened up my charts today and had a quick look over the week before, and we can see that we have a downward going head and shoulders pattern again, indicating that we are likely to see price move down further in this week coming as well. Now, some reasons why the euro is declining. We're seeing ECB talking about wanting low rates and that they're considering maybe doing some quantitative easing. We've seen industrial production figures being low, and Europe is more vulnerable than the US when it comes to the Chinese manufacturing slowdown. They obviously don't have as much manufacturing that occurs across Europe as what it does in China, and they do heavily rely on the trade that comes from them. With the coronavirus, this has stagnated some of that manufacturing. Now, in comparison to the US, why are we seeing it go down, in that parity between the two prices? We're seeing that the US has a stable federal policy that is going on with their monetary policy statements. We're also seeing that industrial manufacturing and the numbers are good across the board for that. And then we've had strong retail sales in most of 2020, as opposed to the Euro zone, which is not getting as much, but we look forward to see what's coming up next. So my indication is that I would be continuing to stay within this trend line channel, and we will see where price goes from there. So now moving on to the news ahead for the week, we have a few different things that are occurring. We do have a note of a US bank holiday on Tuesday, but I'm just going to go through each day as it comes and what I think are the moving market news pieces that are going to be coming out for the week ahead. So firstly, on Monday, we have low impact news across the board from New Zealand, Japan, and the UK, as well as the Eurozone at the end of it. Now, in addition to them all being low impact news events, the only one there that I see that is classified as a low impact news event is the prelim GDP for Japan. Now, even though it's classified as a low impact, I think it is something that might move money. So keep an eye out for it and see what's going to happen on the day. So be careful for today's trading session around that release. Tuesday, we have news coming out for the US, Australia, and Europe. They are all high impact events. The most notable of the lot is going to be a US bank holiday for President's Day. Now, be mindful of the fact that you might see different than normal volumes of trading going on, and that may mean that you get some erratic movements here and there. But the ones to also be looking for is a monetary policy statement coming from the Australian Reserve Bank, and we also have the German zoo report out of Europe. Wednesday, Australia, Great Britain, and New Zealand are giving out some news for us. They are all considered to be high impact. We have Australian wage price index figures coming out, UK CPI, New Zealand Global Dairy Trade Index. Not technically a high impact event, but it is always something I keep an eye on considering how tied New Zealand's GDP is to the global dairy trade market. Thursday, we have Canadian news, US news, Australian news, and Euro news coming out, all being high impact. From the CAD, we have CPI figures, FOMC minutes coming out of the US. We also have employment figures for Australia and retail sales out of the pound. And of course, there's also ECB monetary policy accounts occurring at that point in time. So keep an eye for Thursday. Friday, we have the euro and pound as the two only high impact events that I can see there worth mentioning today. And that is for flash manufacturing and services PMIs across the board coming out of France, Germany, and the UK. Saturday, in the wee hours of the morning, we have Canadian news and US news coming from Canadian core retail sales. And if you remember from our last video, we spoke a little bit on why core retail sales are more important than the standard retail sales. So if you didn't get onto that, go back, have a look and check it out, what I said about it. It is important to consider about the core retail sides of things. We also have flash manufacturing coming out of the US. So for further updates throughout the week, check out our videos in the morning. If you feel on any of the content that I've spoken about today, feel free to send me an email at talk2al@acy.com. And of course, like and subscribe the video so that you can get more content from us in the future. Have a good trading day ahead.